Folks. Well, good morning, everybody. Thank you for joining us for another edition of our Real Estate Backstory. We do this each and every week on Monday morning at 9 a.m. and we hope that you will join us for this. You know, for us, this is a great routine that we feel that realtors and agents really need to get into every week, as far as like getting up and kind of getting into the industry, knowing what's going on and staying focused about what's going on. So my name is Alan Rich. I'm the managing broker here at Maximum Realty and Realtor Partners.
My name is Ming Richardson. I am the compliance broker for Maximum One Realty and Realtor Partners.
And so today we're going to be going over a lot of different information kind of thing. First thing we want to start off with is we have 3 upcoming CE classes this next week coming up. Tomorrow, Ming is going to be teaching
the 2021 RE contract dissection. So this is not GAR, this is RE. For those of you who use GAR frequently, but do have RE contract that is submitted, understand the difference between the two will be very helpful when you guide your client.
This is going to be our very first live and Zoom class. So this class is being held in our McDonough office and virtually on Zoom at the same time. So we'll be both here in person in the McDonough office, as well as you can catch that on Zoom.
So be patient with us, because like anything new, when you first start, there may be some glitches. So
we're going to try not to have the glitches, but you know, just in case, be understanding. On Wednesday, I'm teaching Getting Started with RPR. Now that is a virtual only class, and it is hosted by Metro South Association of Realtors. And so if you are a realtor, you have to be a realtor to have access to RPR. And I'll be teaching on that. And then on Thursday, Jake House is actually doing another class here in the McDonough office, Mortgage 101, and that is also going to be live and in person, in addition to on Zoom at the same time. So we hope that we can see you here this week, or at least catch you on Zoom.
See you guys.
Yeah, absolutely. All right, so I want to share some new information that came out from GREC. So we, I was honored and blessed to be able to have a little bit of time. The Newton Coweta Board of Realtors had Lynn Dempsey, who's the real estate commissioner, out to speak. And he brought up several, new things that the commission's looking at. And one of the things that I really, that we want to make sure everyone is aware of is that the commission is going to be rolling out new changes to the way that teams are structured and organized. And so there's a few highlights from that I really want to point out, because one thing is that they're going to be putting this rule into effect, and they're not going to grandfather in anyone that is not that currently has team names that don't fall under this. There's no grandfather clause for that. And so
if you already set up your business and as a certain type of entity, you may have to change it.
Yep. And so, now by the time that the rule, GREC submits the rule, then they approve it, and then it gets sent to the, I believe, state legislature and the governor to sign off on. So there's probably
a good chance
6 months, a year before this thing actually becomes quote unquote law. But that doesn't mean that you don't need to be addressing this right now. So if you're looking at forming a team or having a team name and how to set that up, please look at and understand what these new changes are, because it is a big deal. And there's no grandfathering in. That was one of the big things that really came out.
Right. That was asked and inquired. And so just so you know, this will fall under license law. So if you violate that, you will be fined and potentially have your license pulled.
So first thing is that, first thing we want to do is to define what a team is. A team is, 2 or more licensees that work together, are affiliated in the same firm. They provide real estate services. They represent themselves to the public as a team, and they're identified by a team name. Now, what does that mean, really? So first of all, each team now has to have a team leader. Now, what happens when you're a husband and wife team? Well, guess what, Buttercup? One of you has to be the head honcho here. So every team must have a designated licensee that is designated by the broker as the team leader. Basically, you just have to say who's running the team. Now, it doesn't necessarily mean that that's the most important person, but there has to be one person that is responsible for being the quote unquote team leader. And then the team leader has to maintain an accurate list of all the members of the team and update the broker at any time. Now, one of the big changes is how teams now have to advertise, because all advertising for the team has to include the team name and at least one of the licensees on the team. Now, sometimes that licensee may be part of the team name, and that's fine. If the licensee is not part of the team name, then the licensee has to be included as well. And now these are new changes. And now all team advertising has to include the name of the firm, the firm's telephone number as registered with GREC.
Correct.
And the logos must be equal or lesser size than the brokerage logo. And see, this is a different change, because in the past, teams and all, basically all licensees, if you weren't marketing real property with an address, you didn't have to have your brokerage information listed. Teams now do, and they're going to be making the changes across the board to where all advertising is now going to need to include the name of the firm's license number, and it can't be bigger than the. And so that's a big change going through, because we see billboards and things like that going on around, as well as a lot of internet marketing in that way. And so these are big changes coming down. Now, when it comes to the team name, there are a couple of big deals. So the first one is the name team or group must be included. I don't think they use the word shall be included as part of the name for all teams. Teams must now have the word group or team in the name. Okay.
Of the team.
And there is no, well, but we're Alliance Real Estate Services. Not any good anymore. You have to have the name group or team in every single name. Now, there are some phrases that are not allowed. Associate broker. This is a big one, because I know so many agents.
A lot of you have put associate broker on your business license, so that is going away.
Yep. Broker, brokerage company, corporation, corp, incorporated,
LLC,
Inc.
LLP, LP.
Yeah. But now here's the good part, is that they have decided to roll back. At first, they weren't going to allow real estate or realty in the team names, and now they are. So now you can be
ABC Realty
team
Group,
or ABC Realty Team or ABC
team.
Realty Group now.
Right.
But so you can have realty and real estate in your team name, but you now must include the word team
or group
now. So those are really, really big issues that we wanted to kind of.
So, I would highly suggest you start changing your advertising logo and what have you, and make sure you get approved by your broker, because there's nothing worse than trying to do something and then have to go back and reprint everything again.
Yeah. Now, two other issues of concern that came out through GREC. One is that the coming soon status is being kind of abused.
Absolutely.
And GREC doesn't have a lot to say on coming soon, because coming soon is an MLS issue that the MLSs are fighting with. Some of the MLSs are now issuing $5,000 and $10,000 fines to licensees that violate coming soon. Because what we see is that agents are listing it as coming soon and then showing property. You cannot market property. You can just have it in the MLS. You can't open the door. You can't show it to anyone. You can't do anything until that property actually goes active.
The reason for that is fair housing. Think about it. You're giving someone else an advantage over someone that hasn't had the opportunity to view the house and make, if not better offer than one that you had. So you can't market coming soon and decide, first of all, you have to put an MLS.
Yeah.
And bottom line.
The other one that works alongside with that we see going on right now.
Pocket listing. Yeah.
Pocket listings are becoming a bigger deal because properties are going so quickly off the market right
inventory.
now. Yeah, inventory is really, really tight. And so we're seeing where there's actually now here in the Atlanta area, there's numerous cases where the sellers are suing the agents because they did not expose their house to the marketplace. They didn't put it on the MLS. They didn't get multiple offers. They just found, and they went and double into deal basically. And so pocket listings and coming soon status are two issues that we really need to be looking at and be very, very careful with moving forward.
Absolutely.
All right. So let's move into kind of what's going on with the housing market.
Back up really quick. If your company has internal email that kind of lists the property prior to coming to market, I mean, there's no issue with that as long as you allow that listing go public and take the best offer for your client. And that's, I know a lot of agents are trying co-op right now internally, but just make sure, even internal agent, don't get mad if your other agent has to choose another offer that's better than your clients, because at the end of the day, your fiduciary duty is to the seller.
Yep. All right. So now we're going to.
Sorry.
Oh, no. We're all good. So we do have some more new information here in the South. We are poised to see $1 trillion in new home sales. So right now, incredible. Here in the South, we are leading the way for housing in the U.S. The South is really, the South is looking at 1.9 trillion in home sales, followed by the West. So, here in the South, we really are kind of leading the real estate revolution at the moment. And that's a really great place for us to be. Overall in the economy, jobless claims fell again last week. But here's the big challenge with jobless claims is that there's so many job openings. As of at the end of March, there was 8.1 million job openings. So we have more jobs than we have people looking to fill them at the moment. And overall, small businesses, 59% of all small businesses are trying to hire, and 44% of all businesses currently has unfilled jobs. Now, what that means for us is that that our economy is looking really, really strong. This many people looking to hire, this is going to continue to really drive economic growth through the rest of the year and for the next coming years, honestly, kind of thing. So one thing that did really draw, especially last week, it drew some concern for me as well as Ming. We had several conversations about it, and that is inflation is rearing its head again. Inflation in the last month went up over 1.2%. A 1% jump in inflation is
huge,
massive. The last time that inflation moved this much was in 1982. And oh, by the way, the interest rate in 1982
was 16.9%.
16%. Okay. I mean, right now we, like my parents bought their first home at 15 and at 15%, and we're really thankful to get it. So, inflation is kind of a big deal for us because right now our Fed's monetary policy is based on employment. There's not been worries about inflation. When inflation goes up, the Feds will raise the interest rates in order to cool things off a little bit. So that's a big concern for us, because if we continue to see inflation going up, then the Fed's monetary policy is going to change. Right now, the Fed is buying a lot of 10-year treasury. And when they buy that many 10-year treasury, it helps keep the rates really, really low, which in turn fuels really great rates for our buyers. But if inflation starts jumping up there, what we're going to have is the Fed is going to change their buying policy in order to combat high inflation. And so this is a big deal for the real estate industry. This is of concern for us. Now, this past week, interest rates were going on 4 weeks where interest rates have been still under 3%. And so we've had 4 weeks in a row, but understand that everybody, and I do mean everybody, is like, listen, mortgage rates, the decline is not going to last. We're not going to stay under 3. We need to be prepared and preparing our clients for that kind of thing. Now, one other thing I wanted to bring about while we're talking about interest rates. So Ming and I had a debate this past week. And that was about.
We have a debate.
Well, always. And so Ming and I disagreed on the percentage of homes that are being sold through FHA versus conventional. And so the new data just came out. And so by loan type, loans by Fannie and Freddie, which Fannie and Freddie are conventional loans take up 72.9% of all loan applications, followed by 15.8% of FHA and 10.3% by VA. Only 1% are either RHS or USDA loans.
So he wins.
Well, but a lot of times we see folks who are like, my FHA loans my FHA keeps getting beat by conventional. my FHA keeps getting beat by conventional. And the challenge is that honestly, 70% of the loans right now are conventional. And so, when only 15% of the loans are FHA, I mean, just the raw numbers means
it's incredible.
Well, I mean, there's just a lot more
remember,
conventional right now.
And I remember about a year ago, I mean, goodness, we're looking for DPAs and everything else. We're working a really hard loan cases. And now, during COVID, a lot of people are saving money because they're not spending as much, some, not all. And so they're, brought their credit score up by paying off debts and what have you. So, and now they're eligible for conventional loan, which is a blessing.
Well, the other thing I want you to really think about, in the past, kind of the buying pattern with FHA was you would buy an FHA loan and then you would you would either get it refinanced later on. Well, the challenge right now is I don't see interest rates. This is going to be a once in a lifetime deal, getting interest rates where they are right now. And so with an FHA loan, there's no getting rid of mortgage insurance. Your
Right.
MI is stuck with that mortgage for the life of the loan. Whereas on a conventional loan, they
can actually ask for a write-off of the insurance after 20% has been paid off.
Right, and then that will save folks a lot of money. But the challenge is that even if they refinance down the road, they're probably not going to get a better rate. So we really are, kind of guiding a lot of our clients. If they're able to go conventional, we're recommending that they do, simply because that normal pattern of being able to refinance later on at a lower rate is probably not going to be a viable option a year or two from now. I really see it being much closer to 5%.
Yeah. And you see a lot of people doing refi. That's because interest rates are incredible right now. And you won't see this down the road in the next 5-10 years.
All right. A new study came out that 32% of all U.S. homes are considered equity rich. Now, what does that mean? That means that a third of the homes in the U.S. have over 50% equity. Okay, this is a very different market from where we were in 08. All right, when a third of the homes have over half of their equity, only owe less than half of what the home is worth, that is a really great position for us to be. In addition, the underwater homes the number of homes that are underwater continues to drop.
The only thing I want you to think about this is that even though we have 50% equity in home, so if the market ever change, the equity would drop a little bit.
Yeah.
And 50% is also fueled by the increased value of home right now. So just remember that.
Yep. So Gallup released a new survey this past week. And so, just talking to consumers about the housing market and that kind of stuff. And there's three main data points I really want to share with you guys. So the first is that, overall right now in the US, right now, what percentage of Americans expect local home prices to increase over the next year? 71%. So I say this because a lot of folks are like, is the market gonna fall? Is it gonna decline? When's the market crash? Really, at the end of the day, 71% of Americans, not just real estate folks, 71% of Americans say that home prices are going to continue to increase over time. So yes, I don't think if you're a buyer, that's not great news that the market is improving. But if you're a homeowner, that's a really great news kind of thing. That's exactly what we want to see. Now, the other side of that is what percentage of Americans say it's a good time to buy is really, really low. Now, it has gone up a little bit more. It dropped to a low of 50%. It's at 53 right now kind of thing. But it's just a really great time to buy a house.
Well, I can tell you, we have buyers that just decided to take a break because of the competition out there. It just fierce in purchasing home, and they feel like they're not getting the value of the purchase for what the value they feel like the house is worth.
But our big concern for here is that for here in the U.S., wealth is really tied up in home ownership. And so if you're not part of the home ownership game, if you're not buying your own home, then the chances are, 10 years from now, you're not going to have any equity. Whereas if you buy a home today, we are not looking at prices dropping right now. We just, it's not in the cards. It's not in the market. We have been making babies faster than we've been building houses. So there's a lot more demand than there is supply. So if our buyers are continuing to just say, nah, I'm just going to rent. I mean, it's great if you're a landlord, but it's not doing great for people to build wealth. Now, all that being said, what is the best long-term investment? Real estate continues to move up. Right now, 41%, which is up 6 points over 2020. Say real estate is the best place to do it. Stocks continue to move good, but that will always be anytime the stock market's doing well, that kind of thing.
The Go has moved up 2 points.
Yeah, but savings accounts, and everybody knows you can't get anything in savings right now. And
it's
bonds,
actually -8, and bonds are -5. So that's according to the Gallup poll.
Yep. So single family home prices rose in 99% of metro areas. Now, this is not a shocker, but here's the deal. This is not just Atlanta, okay? 99% of metros in the United States, home prices rose. Okay, so this is going on everywhere in the U.S. This is we all want to lament about, well, you just don't understand it was in our market. It's this way everywhere kind of thing right now. And so we're seeing that across the board everywhere, the housing market really is very, very strong. Now, how does that break out as far as like what are these new records set? So overall, home prices are up 21% from 2020. Now that sounds staggering, and it is. Like that's the first time in our career I've ever seen a 20% price increase. But you have to remember where we were last year. Okay, where were we last year? We were all locked down, worried about toilet paper, kind of thing. And so yeah, that's kind of why we're seeing that. So don't let that number necessarily scare or deter you, because last year the world was on fire with COVID at this point, kind of thing. So that's why the big swing. But now we are overall continuing to see price increases, but that is going to start leveling off as we start moving into where the market started jumping up last year. New listings of home are up 53% from 2020.
I saw more inventory coming online this weekend than I have in a while.
Now, what you're looking at on the screen here is actually 3 different data points. One
screen share here.
Oh,
Yes. Okay.
Oh, we're there.
All right.
So, but the red line, that's this year. Now the blue line was last year, but if you look at the gray line, that's the year before. That's 2019, and you can see that we're kind of following in very normal trends. Now we are down a little bit. You'll see that new listings are down 8% from 2019. So yeah, I love seeing it 53% up from last year, but let's be honest again.
Last year, everybody took their house off the market,
right?
Because they don't want to have COVID in their house and be affected.
So we do want to see more listings coming up, and we are starting to see an improvement in inventory levels, but it's still depressed from where it was in 2019.
I will tell you, with more new listing coming online, it make the competition a little less. And if you can just educate your buyer and let them know, hey, just keep on at it. Y'all get one of the houses.
Yeah. It is about staying diligent. This is one of those data points that we don't that are tough to share with our buyers right now. And that is the active listings of homes for sale is down. Yeah, it's down 37% from 2020, but it's down 48% from 2019. This is the one that shows we just do not the total number of homes, because our volume is so much higher than it was in these past 2 years. The overall active listings, homes that are available just to show, is down 50% right now. Days on market also, the record low. Right now, our average days on market is 19 days. And that includes all those crazy overpriced homes out there kind of thing. This is just an overall rolling average. And so this is our lowest record days on market ever. Now, here's another not so great stat, but 48% of homes sold above list price. Okay. We need to understand that, because this is one that we have to be making or explain to our clients what's really going on with the market. I'm not going to ask one of my buyers to pay more than they feel comfortable for. I don't mean that, but you have to also make sure that we are educating our clients and letting them know really when half of the homes are selling for above asking price, we see a lot of offers still come in under asking. And I'm not trying to bash anyone. If they don't feel the home is worth it, then that's okay. But if you continue to make offers under asking and you continue not to get the deals, at some point that gets pretty
well, honestly, you're just wasting your time. If you're a buyer, not all, sometimes I call seller and buyer are good clients. If the buyer is not willing to listen to you and you wrote 8, 9, 10 offers every time you get rejected, at some point you need to decide what your time's worth and whether or not this is a client you want to keep.
And and do your buyers have realistic expectations? I can't tell you how many of our clients, how many folks call the brokerage like, hey, can I get a list of HUD homes? Hey, can I get a list of bank-owned homes? Hey, can I get a list of homes that are coming in foreclosure? They're not there. Like that's not a market reality we have to offer to buyers right now.
One or two Fannie Mae that I see online. Guess what? Those go to owner occupant first before go to investor.
Yeah.
So you're even with that one or two online, you're still competing with owner occupant just as you would in a regular market.
The average HUD home right now has 44 offers per listing. 44, and that's just buyer. That's just owner occupants kind of thing. So this one also goes along that same. The sale to list price ratio is climbing past 100. The sale to list price ratio is at 101.4% this year. Now you can see where it'd been doing really, really good all through last year. I mean, we were at a high of 99.4% last year, but now we're over 100%. So that means that the majority of our listings are selling for over asking price. Again, this is a touchy subject that requires us to have those communication with our buyers, but they need to understand really what's going on with the market, because one of the things that we kind of want to wrap up here with, or not wrap up, but kind of jump into is, like, right now, the biggest hurdle for our buyers is winning a bidding war kind of thing. 45% of all of our buyers right now, why are our buyers not successful? 45% of it, it's because they have lost a bidding war. That continues to be our number one reason why our buyers are losing that. The number one reason is that they get outbid when they make an offer. At 32% is that they can't find a house that they can afford. We know that affordability is going to continue to be an issue right now. Right now with the price appreciation we've seen, that is a challenge. For us, the challenge has been that in the past, people would like, well, I want to spend $250,000 for a home, and they would look for homes at $270,000, $280,000, and think they could make a deal. Well, that's not a reality right now. If I got someone whose max is $250,000, I'm really looking at $220,000,
right? $220,000,
$230,000 kind of thing, in order to really be realistic about that. So we got some new data. I mean, this is not necessarily new, but the census came out. And so what happened with Georgia? And so you can see Georgia right now. Georgia is continuing to grow good. Texas is the fastest growing state in the nation. You can see a lot of the flyover states also, but Georgia in there is continuing to have a positive net effect. Right now here in Georgia, we got 10.6 million folks. And I remember when that long ago, we had 6.5 million folks. So
almost double, not quite.
Now, one of the things that you see on the news is a lot of talk about House of Representatives. What happened here in Georgia? Nothing. Okay. We had 14 House of Representatives. We still have 14 House of Representatives. So I do want to just kind of touch on that so that we just kind of know what's going on with there. I wanted to talk really quick about how do we help our buyers confidence in a hot seller's market. Okay, this is one of those big deals right now because there is so much data out there, and the home buyer sentiment is pretty low on our buyers. How do we help them? Well, the first thing is we have to educate our clients. They have to really know what's going on. The numbers that we shared, are not what I would call great news for buyers. But if we don't share that 50% of listings are going for over asking. If they don't know that beforehand, then we are not preparing them to go to battle. So really, what are the market stats? What are the days on market? What percentage over asking price is because it really does depend on the price point of the home, kind of thing. The second is
prepare your client. Go ahead, get them pre-approved and not pre-qualified. Have them submit all the data and stats to the lender already. The bank statement, the tax return. Go ahead, get it all the way through underwriting. Guess what? When you make an offer, you can actually shorten your appraisal and financing contingency, where it's going to make you look like a much stronger buyer and committed buyer than a one that is just in the beginning process.
Yep.
So offer price discussion, make sure you tell them what's going on in the market.
Well, and have them prepared, be like, this house is just on the market. We've looked at it. This house is not going to go under asking.
Yeah. And matter of fact, I told one of my clients last night, I said, if you're going to bid on list price, then let's not make an offer, because at this point you will not get it, simply because the market and the data in the neighborhood is beyond. A lot of agents are listing just slightly below market value right now, just to attract multiple good offers.
And then we're letting the market decide.
Yeah, and honestly, a lot of agents are writing. You guys, be careful. Please be careful when you write a 0 due diligence period. Make sure you have that strong conversation with your client. If not, follow up with an email, okay, to cover your asset. So, we had a situation where there's a 0 due diligence and earnest money was due. And guess what? The listing broker the seller wants their money, and rightfully so. But the thing is, if the holders never received it, the holder's not going to disperse anything.
Yep.
So it becomes a heated issue, and also it's going to damage your relationship with the listing agent in the future, because they're going to look at your offers like, nah.
Well, but let's get back to preparing the clients.
But anyway, prepare your client, let them know what's going on, and also do a comp in the neighborhood. Just let them know what the neighborhood's running.
Yeah.
So
get your buyer brokerage agreement. Go ahead and have that signed and ready to go.
Oh yeah, and also make sure if you're a Maximum agent, in our reference section of Paperless Pipeline, there is an escalation clause for appraisal guarantee, as well as offer.
So
okay, use that.
Talk about that. Also, make sure you prepare them that there's a good chance they're going to lose an offer.
Yeah.
Next thing is to make sure that we are sharing with them that they need to dedicate some time to this process. Like this is not the market it was a year ago, 2 years ago, kind of thing,
or even 3 months ago.
Yeah,
that matter.
I mean, you have to prepare them to go into the boxing match. Mm-hmm. And if you're not preparing them, then they're just going to get floored by this and just walk away. And the last thing is they have to be nimble. They got to be quick. They got to be ready to move. The days of, I can't tell you how many time and time again we hear of clients that were, let's sleep on it and then we'll make an offer tomorrow. And guess what happens tomorrow? The house is gone. Mm-hmm. So, they have to be ready to pull the trigger when they find the house that really, really does interest them.
And please read the private remarks and MLSs, because a lot of agents are not doing showing time. They're only doing open house from a certain time. And that is it.
Yep.
And they'll tell you when the deadline is. And if you submit afterwards, guess what? You lost out.
Now, now, one of the things that we've seen with this new housing market is that pools are a really big deal. Houses with pools are selling for a much higher percentage than homes without. But guess what? Putting chlorine in your pool is a big deal, on top of not being able to find gas, which we can find now. I'm just being funny. Right now, chlorine for pools is up 50%. Now, it's not anything political, but last year during the hurricane, the factory that made over 50% of all the chlorine for pools in the U.S. burnt down during a hurricane last year.
Or it's level.
So, flattened, that kind of thing. So, I do want to wrap up with this. This is going to be our last little slide that we wanted to share. And so one of the things that we've seen this, is that DIYing is a big deal for homes, but what are people trying and where are they failing? That's one thing that we hear a lot of times is what do I need to do to prepare my home, that kind of stuff. And so we'll see that, right now, over 50% of the folks are attempting to work on their bathrooms. But guess what? Almost 20% of them fail. Kitchens, over half the folks are working on their kitchens. 17% of the time fail. Okay, so we need to make sure that we have a list of people that can pull our home buyers, our home sellers, and our clients out of trouble when they get into it. Even landscaping, about 50% of the time, folks are failing at that kind of thing. So yeah, I love when our sellers make their houses look just amazing prior to listing and showing, but not all our sellers are created equal. And so we have to make sure that we are ready not only to make recommendations, but sometimes to kind of pull them out of the fire when they need it.
Well, and the problem is that when you try DIY, if you don't know what you're doing, you can actually cause more damage, and it will not be covered under hazardous insurance because you screwed up on electrical or plumbing or anything. And a client can walk in a house and look at a tile and know, oh, this is not professionally done.
Yeah.
So there we go.
All right, if you need some me time after this, please, we hang out on Zoom. If somebody needs to chat or have any kind of questions or concerns, you go to max1.rock/chat, and we'll be available to answer any questions, help in any way that we can. So we hope that you guys have a really great week. If you need us, call, text, smoke signals. We answer it all.
Thank you, and have a beautiful Monday.
Bye, everybody.
Take care.